Wednesday, December 11th, 2019, Maneco 64, home of alternative economics and contrarian views. Today I'm going to talk about whether the Federal Reserve is really all that powerful and can stop a market calamity or a financial calamity. I'm going to reference this book here, Lords of Finance, to talk about that. I also want to talk about what happens in a credit crunch when the system freezes up. I saw firsthand what happened in 08, 09, 2010 or thereabouts in the economy, in the system. So I want to talk about that. I will look at the markets, of course, what they're doing this morning. The markets seem to be very complacent, very calm right now. But I don't think things are as calm and complacent underneath the surface. Today, I'm going to go up to the City of London. I'm going to see one of my old friends from the City of London, a few other people. I'm going to be walking past the Bank of England, of course. I'm going into Cannon Street Station. I'll walk up St. Swithin's Lane, where the Rothschild headquarters is, NM Rothschild. Then I'll walk up through Lombard Street, around the Bank of England, and then behind the Bank of England. That's where I'm going to go. And with that, I wanted to say that I've got my time to retire the old lady of Threadneedle Street and shut the bank's doors mug today. You can get one of these in the Maneco 64 Teespring store. Of course, the old lady of Threadneedle Street is the nickname for the Bank of England. So this is the equivalent of the end of Fed mug for the Bank of England. In the back, I've put the quote from the founder of the Bank of England. You can see here from William Paterson in 1694. And this is what he said. This is the founder of the Bank of England. The bank hath the benefit of all interest on all monies which it creates out of nothing. So that was William Paterson, the founder of the Bank of England. That's what he said, not me. So yeah, again, I'd like to thank everyone for following the channel, for subscribing, for participating, for supporting through PayPal, Patreon, through the Teespring store. And just wanted to say that I've got a Christmas 2019 discount for the Maneco 64 store, 20% until the end of the year from now on. So you could get this mug and other stuff for 20% off. The promo code is XMAS 2019, Christmas 2019, but XMAS 2019. You use that, you get 20% off. So let's go into the question of whether the Federal Reserve is omnipotent or they're all powerful, right? Looking at it in the short term, the last couple of years, it looks like it is, because it's been able to save the markets every time the markets look like they're going to crash or correct very sharply. Or even last year when it corrected very sharply, Fed came out and said we're going to stop raising rates. And don't forget, up until pretty much this time last year, maybe a little earlier in November, people or banks like Goldman Sachs were still looking for 4 rate hikes in 2019. What we got, of course, was 3 rate cuts. So it looks like the Fed can change things around and keep things going. But I think personally, if you look back at the markets since the inception of the Federal Reserve in 1913, we've had major crises, major crashes, right? So yes, they can kind of stop the rot for a while or temporarily, but in the end of the day, the markets are bigger than the Fed, in my opinion. And I think it's a bit complacent to believe that they'll have the markets hand, all the time, that Fed put will be there. It might be there, but it might not be good enough, right? So I wanted to reference this book here. This is a passage in one of the chapters here where they're talking about the run-up to the stock market crash of 1929, right? It's called Purging the Rottenness. The chapter is chapter 17, 1929 to 1930. This is what it says here. The book says on page 351. So yeah, the book is Lords of Finance, right? It's by Liaquat Ahmed. Very good book. The Lords of Finance were, of course, the central bankers back in the 20s and 30s. Hjalmar Schacht, Hitler's banker, the Reichsbank head. You had Benjamin Strong, the head of the New York Fed. You had Norman Montague, or Montague Norman, sorry. He is the governor of the Bank of England. And the French counterpart, I forgot his name, Moray, I'm not sure, I forgot his name. So these are the Lords of Finance, right? So in the book it says on page 351, and this is just before the stock market started crashing, right? This is in September, early October, or even towards mid-October. People didn't really think the market would come down. So I'll quote, says, even the usually bearish Alexander Dana Noyes of the New York Times was skeptical of the forecast of a market collapse. It is not perhaps surprising, and this is quoting him, right, the New York Times guy. It says, it is not perhaps surprising that the idea of an utterly disastrous and paralyzing crash should have found few believers, he wrote. After all, in contrast to previous episodes, the country now, and I'll quote this, has, and this is what he says, the power and protective resources of the Federal Reserve. While the market was guarded against the convulsions of old-time panics by the country's accumulation of gold, right? So there you go. Even back then, the Federal Reserve did intervene. It was more the New York Fed. I think the board at governors in Washington, D.C., they're not too keen on it. But some people think the Fed didn't do anything. And the New York banks, no, they did cooperate, according to this book, right? Even back in 1929, they thought the Fed was all-powerful, that nothing could happen to the markets. Before I go into the markets this morning, I just wanted to quickly talk about what happens in the credit crunch when the system fails like it did in '08. Well, I'll give you an example with Billy, who's not here this morning. He didn't feel like waking up. He's getting older and it's winter, right? I just left him. But at the time we got Billy in 2008 in the summer, unfortunately, our previous dog had passed away a few months before. His name happened to be Billy as well, and he was a Shih Tzu as well. Looked very much like this Billy that we have now. So we were debating whether to get another dog. We were sad that the other dog had gone, but then we decided to look into it. I called the breeder near where we used to live. And I saw an advert in the Kennel Club website, and I asked the breeder, have you got any Shih Tzus left? He said, yeah, we've got one left, and he's got a name. And I said, what's his name? And he said, Billy No Mates. And it's an expression here in the UK when someone's all on his own, right? He's Billy No Mates. So that's why he named him that. And he was being advertised for about £500. And he told me right off the bat, the breeder on the phone, no, you can have him for 250 because I haven't been able to sell him. And I have other dogs, my own dogs, have a lot of costs, and I can't keep looking after him. So we went to see him. We loved Billy, of course. My daughter didn't know we were going to go at the time. We got there, it was a farm, and she was surprised, of course. And Billy was there with his mom and his grandma. And I paid £250 for Billy. Nowadays, a Shih Tzu is like 3 times that amount, sometimes more. And what I'm trying to say is that there is no cash around. People don't have any money when there is a credit crunch. I've said in the past that Billy is, of course, the credit crunch puppy, right? And that's what happens not only for puppies and dogs, but also for any, let's say, item or any kind of asset that requires a lot of liquidity. I'm not saying a dog is a big investment, of course, or purchase, but for example, the housing market, real estate seizes almost because no one can get finance for it. That's how it is in the credit crunch. There's very little cash around, so you do get bargains. Am I saying I got Billy only because he was a bargain? No, I would have paid the full price if the seller hadn't lowered the price, of course. So just wanted to talk about that. What happens in a credit crunch? What about the markets? It's 8 a.m. London. So stock markets yesterday were very weak. Actually, just after I finished the video, they dropped quite a bit. I think the Dow was down over 100 points as people were worried about the trade deal, right, coming up, the deadline on Sunday. But then someone came out on the Wall Street Journal and the market just went back up, right? But at the end of the day, the stock markets finished slightly lower yesterday, so the markets haven't made new highs recently. It's looking a little bit top it. You know, there's a top technically in the markets. So right now, spot gold is $14.65, up just under $1. Silver is down 2 cents at $16.64. The Dow is unchanged, 27,883. And this is the interesting thing. Recently, as I've made my videos, just after it, the stock market either has moved up very sharply higher or very sharply lower, which is unusual. So there is a little bit of the inkling that volatility wants to pick up in the markets. S&P is up 1 point. S&P futures at 31.33. NASDAQ 100 future is up 4 points, so very quiet. Sterling is moving a little bit here. Yesterday it rallied strongly up above 132, and then it turned around, and now we're almost back below 131. We're at 131.15, down 1/3%. So we've got, of course, the election tomorrow, Friday the results, so it's going to be, I think, very volatile for sterling. Euro is down slightly at 110.83. Dollar is unchanged against the yen, 108.72, and the dollar is up 0.15% against the yuan, 703.73. Crude is down 0.5%, 58.85. WTI, and Brent is down 0.5% as well, 63.64. Just to finish off, the bond market is fairly steady, not moving a lot. We're at 183, the 10-year yield. If you enjoyed this video, make sure you hit the like button, subscribe to the channel if you haven't yet. Make sure you hit that little notification bell to be notified of all my new videos. And you can follow me also on Twitter, Steemit, and on DTube. I wish you all a great day. Take care. Bye.